Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 21st, 2022. Let's take a look at market and also let's look at profitable companies growing faster than the industry. So with that, let's jump in. Look, market is really volatile, very turbulent, and as you can see here, Dow Jones Industrial Average going to be a little bit lower tomorrow. Look, it's down 538 points in the futures market. That tells me market is going to be down tomorrow. There is a lot of tension around Russia, Ukraine, and also market is afraid of Feds. Feds may raise the rates, and they may also taper the bond buying program. Look, finally we are retesting the low, as you can see here. So I think once we retest the low, probably it might go a little more down and then start going higher. That's why I'm buying the dip slowly, buying some quality companies. We'll talk about some of those quality names. And also you could buy some strong ETFs like QQQ, SPY, XLV, XLY, and XLK, and so on and so forth. Even SMH for that matter. All work here. As the market comes down, you got to double down on strong ETFs and strong stocks, and very slowly. Don't buy too much. Buy slowly, accumulate. This is the best time to accumulate for the long-term profitability. And look, we got S&P 500 down 78 points in the futures market. And look, it's a turbulent. We also did a retest here of the prior low. That tells me once it retests, it might come down a little bit, then start going higher. And same story, Nasdaq already retested the low here. We are a little bit, we did the retest here. And same story with the Russell 2000. We are not quite there yet, but we might also retest here and then we can go higher. And look, long-term story is still intact here. This is a 5-year weekly chart. Dow Jones Industrial Average doing nicely. Look, we got 2018 Fed rate hike here, came down, went higher. COVID-19 came down, went higher. This is another blip in the road here. I'm sure this is a great buying opportunity. We don't know it yet because we don't know how the future holds. I think it's a great buying opportunity. We should buy slowly and accumulate some great companies. S&P 500 is a long-term growth story here. It's a great time to buy. And same story with Nasdaq. I love Nasdaq. It is a great time to buy some great Nasdaq stocks. If you're afraid, buy QQQ. And same story with Russell. Russell is also nicely up here in a 5-year chart. It's good to buy this dip and accumulate slowly. So with that, now we look at the fear and greed index. Look, from a fear and greed index perspective, right now we're in the fear zone, and I can see us going to maybe say 30 or so and then start going higher. So last week we were at 34 because the market got sold off, and we might hit around 30 or so and then start going higher. For the folks who are selling some put options way below, maybe in the good ETFs like QQQ, SPY, it's a good time here. You could get some good money, especially because fear is high here. You could get some good money selling put options way underneath in the great ETFs like QQQ and SPY and SMH and so on and so forth. So with that, let's jump in here, look at the quality stocks. Look, all these companies are growing faster than their respective industries. So that's why I like these companies. And look, we got all these great companies. I sorted this by market cap. Look at the market cap here. We got market cap above, say, $48 billion on all these companies. And look, the current price and target price. Target price is much higher than the current price for all these names here. And also look at the sales and sales growth here. Nice sales and sales growth. Look at the sales growth, 1-year sales growth, almost double digit except maybe Cisco. And we got quarter-over-quarter sales growth, nice in many companies here, and great gross margin. Look at the net margin. All these companies are doing great money. Net margin is more than 10% in all these companies here. So that's why I like these companies. These companies will emerge stronger. These companies are making money big time. So these pullbacks are really great opportunity for these companies to buy other companies, become even stronger. And look at the debt to equity ratio. Some of these companies might have some debt, as you can see here. I've highlighted few companies in red here, like Qualcomm, and we got SPGI, ZTS. More importantly, we have to look at the quick ratio. Quick ratio is really, can the company meet short-term obligation? If the quick ratio is more than 1, it can easily meet the short-term financial obligations. That's why it's good to look at the quick ratio. Sometimes companies do take some debt because they can get great rates right now. That's why they take some debt. Especially companies like Apple, they got a lot of debt because they could get the debt at a much lower interest rate. Look, from an RSI perspective, all these stocks are sold off here. RSI is much low, as you can see here. I've highlighted few stocks which are much low RSI here, below 40. Look at some of these names here. You could buy them slowly and accumulate. Then the PE ratio perspective, look, some companies are high PE ratio, like NVDA. For a reason, it's a growth stock. It's making money also. And same story, we got few names with high PE ratio, like INTU. It's also a high PE ratio candidate. Company is making money. And then we got one more here, INTU Surgical, which is one of my favorite. Again, a high PE ratio. And last but not least, we got here Illumina. It's again a great company, medical device stock here, and it's got a little bit higher PE ratio, as you can see here. Then, as you can see here, on a 5-year basis, all these companies have got made a lot of money here. Look at the 5-year performance. Many of these companies have done great. Most importantly, you might say, okay, I get it. They have made money in the past. Tell me, what are they going to do in the future? Look, from a future perspective, we got next year earnings per share and next year revenue growth. All are positive here. So analysts are predicting nice revenue growth as well as earnings per share growth for these companies. That tells me these companies are going to do well in the future. And look, Altman Z score, which represents the financial stability of the company, is nice and high. Below 1.8, it's a risky. Company may go under, but above 1.8 tells you these companies are very stable. And look at the cash and free cash flow here. All these companies have got more than $1 billion of cash on their balance sheet. That tells you these are stable companies. These companies are not going to go bankrupt. And look at the free cash flow on a trailing 12 months basis. These companies are generating so much cash here. You don't need to worry about them going under and going out of business. And look at the cash from Microsoft and Google here. Google is looks like it's hit as highest stock here, $139 billion of cash here. And Microsoft also has got respectable cash, as you can see here. And then, everybody's worried about Meta or Facebook. Look at the amount of cash they have. They got $47 billion of cash. You don't need to worry about Facebook. They're going to crush the competition in the metaverse and come very nicely. And even Cisco, look, they got $23 billion of cash. They are a cash cow. They can buy some good business and go from there, take advantage of these depressed price levels here. And look, all these stocks, look, they are down from 52-week high. All of them are in the correction territory, as you can see here. That's why I like these companies. Many of these are my favorite companies. I've been buying slowly, buy a five stock here, 5 stock there. As the company stock comes down, that's the great way to invest for the long term. And many of these names are great. You could even sell some put options if you're into option selling. That's another way to really buy your favorite stock at a lower price. So with that, let's jump in and look at the moving average. I always look at the simple moving average, which is one of my favorite way to look at some of these names. Look, same stocks that we saw in the previous chart. I got here a 5-day moving average. and a 10-day moving average, and all the way to 200-day moving average. Look, right now, many of these stocks are, below 200-day moving average, as you can see here, with the exception of Cisco, which announced a good result. Stock is showing some positive strength, as you can see here. And we got here Qualcomm, which is still positive, as you can see here, which also did which also did nice on the earnings. And then you got Vertex Pharma, which it was beaten down way long ago. Now it's trying to go higher. With the exception of those, all these stocks are down below 200-day moving average, mainly because of tension in the geopolitical area with Russia and Ukraine, and also Feds. They might be increasing rates. That's why all these great stocks are below their 5-day, 10-day, 25-day, 50-day, 100-day, and 200-day moving average. And as you look through their charts, many of these stocks, look at the chart here, they're trending down, as you can see here. That's why it's good to slowly buy these names here, take advantage of this slow down here. Many times when the market start going higher, you wish you would have bought it earlier, but then there is no chance to buy. So that's why I will take advantage of this this downturn here. Buy these quality names like Microsoft, Google, NVDA. They're all great stocks here. You could just slowly buy them and invest for the long haul. So with that, thank you very much. Happy investing and trading. Please subscribe.